Welcome back to Be Rich. My brother Vinod is here today, and we are going to discuss five books. Books which I forced him to read when he was a kid. There's a big age gap between us, and so I forced him to read these books. I hope that you read these books and profit the way we did.
Hi, Anand.
Hi, Vinod.
So today I thought we'll talk about some of the books you've always recommended to me about investing. So, since I'm a long time follower of you and I've been listening to you, and so I thought we might as well share the books which you have always recommended that I should read and everyone should read. The first book which came in my list was the first one was Intelligent Investor by Benjamin Graham. So, can you tell me why you recommended this book?
It is the Bible of value investing. See, before Benjamin Graham, there was no value investing. Stock market was just speculation. Benjamin Graham was the first to say that behind every paper there is a company, and that company has to be valued. You can assign a mathematical value to the value of that stock. How to arrive at that mathematical value is another book. But what you should do, when you should do,
Intrinsic value.
to intrinsic value, he preaches in that book. The other thing is, what is the difference between a speculator and an investor? Very clearly.
Mr. Market.
Yeah. So there is a concept of Mr. Market in that book, which says like today Mr. Market is in exuberant mood, and I am looking foolish by saying the market's values are too high. And but a day will come when Mr. Market wakes up and the value comes down.
Correct.
So that has happened in case of Paytm already. It can happen to the whole market. It can happen to individual stocks. But in some cases, you will find that the value is good, the company is good, and the market doesn't like it and will bring it down. That happened in case of Tata Steel.
Okay.
And for many years, Tata Steel was undervalued.
Correct.
So how to calculate value? What are the different situations? What kind of investor you are? Whether you should be an enterprising investor. An enterprising investor is somebody who is very aggressive. And what type, whether you are a defensive investor. Actually, in Graham's definition, I'm a very enterprising investor. But in the modern world today, I am an extremely defensive investor. Conservative investor. So what kind of investing style you should adopt?
Correct.
When you should adopt. Then he also talks of what are special situations. When you try to exploit special situations in the market. So those are special situations.
Yeah, but the thing is, this book was written such a long time back. The world economy has changed. Whatever his world views were has become very different.
No, the principle-
Information technology didn't even exist. Internet didn't exist. So is it even relevant in today's?
No, the world has faced several disruptions. Before, roads was the first one.
Correct.
Then there were canals.
Correct.
Then there were railways. Then there was telegraphy.
Correct.
Then there was telephony.
Yes.
So in that, internet is another thing. It does not change.
So you're saying the principles of investing don't change?
The principles are timeless. Its only question is how patient you are to wait for the results. Even if you do all this, out of 10 investments, you will get 6 or 7 right.
Okay, when you're talking about this, one concept he talks about is called as margin of safety. What is that margin of safety?
When I bought Tata Steel at 250,
Correct.
I was playing with extreme margin of safety. The risk was whether Tata would go bankrupt. My belief was Tata would never go bankrupt. Now I have been vindicated to that. So from 250 it has gone to 1000. But even today, technically, on earnings it is making and the rates at which he is paying off debt, it is still undervalued.
Okay.
But I bought it at 250. My margin of safety is so strong that it has gone up 4 times and still I am not.
Yes, that's not even counting the dividends you've been paid.
Yes.
Correct.
So that is margin of safety. In 2008, when the market crashed, adjusted for dividends, I could afford to buy TCS for 63 rupees.
True.
Today TCS is, I told you, we bought it together. Now TCS is at 4,000 rupees.
Right.
63 is margin of safety.
But this book is based on his previous book, which he wrote first, which is called, what he called security analysis. What is the difference between security analysis and this?
Security analysis is for professionals. It talks you how to analyze a balance sheet, how to analyze a company.
Do you need to learn that?
Of course you need to. If you want to be a professional stock picker, you have to know it by heart. The biggest difference between then and now, in Graham's time, for most of the time when he was a professional, he died in 1974. 1971 was when the link between gold and currency was removed. Gold was pegged to currency. So currency inflation was not a big picture. that the value at which currency eroded was not a major picture. Whereas today, the rate at which currency erodes is a major portion of it. In 1991, rupee was 26. Today, it is 75.
Hmm.
So, currency itself has devalued. Okay, you may say, no, dollar and all that. Dollar was 280 when Volcker crushed dollar. Gold came to $250 or $280 an ounce. Today, it is $1,800 an ounce. So, that was not there in when security analysis.
Yeah, but see, my fundamental argument in this is, in a country like US, you have very stringent rules being applied on these companies when their balance sheet is being produced. In India, it's very fluid and it's very murky. We do not know really if the balance
Then
sheet
there
is
is
a
a
balance
book.
sheet.
There is a book that comes much later down the list, which I have recommended to you.
Okay.
In that book, he will say, if you cannot trust the promoter with your wife, don't invest in that company. And that's why I keep on talking of Tata's.
What's the name of that book you're talking about?
Common Stocks and Common Profits.
Philip Fisher's.
Phil Fisher's.
Let's jump into that book.
Right. Let's not jump straight into that.
Hmm.
But what I'm trying to tell you is,
Hmm.
that is why I recommend Tata's.
Hmm.
I met Tangamail Ramesh personally.
Hmm.
I recommended Tangamail.
Hmm.
When I talked to Tangamail jeweler Ramesh, I knew that he was a man of great integrity. I talk about Wipro. I talk about Infosys. Very few times I've talked about HCL.
Yeah, but not every common investor can meet these people, man. So
I have not met anybody. I met
Absolutely
J.R.D.
right.
Tata in flight once. I have seen Ratan Tata. I have not talked to Ratan Tata.
Correct.
From their actions, the way they behave, from the corporate actions they do, you can judge.
Correct.
For in Tata's cases, me and the shareholder are same. If the shareholder loses money, I lose money. In Mukesh Ambani's case, it's your money, it's versus my money. I am protected, you lose your money. That will not happen with Tata's or Wipro.
Okay. The next book which I want to talk about is another favorite book of yours, which you made me read, which is very hard to find, is by Seth Klarman. Margin on Safety.
This book is out of print.
Hmm.
There were only 500 or 5,000 copies of the book that was
Hmm.
printed. The book sells for a few $1,000s a copy, but it is available in print. You should read it.
So what is this guy, Seth Klarman? Why?
Seth
Because
Klarman
everyone knows about Buffett. Everybody knows he's big.
Okay.
But Seth Klarman is not a name that everyone drops.
Seth Klarman, very few people know Seth Klarman. Seth Klarman is one of the greatest disciples of Buffett in the old style. Buffett changed his style a bit. But Seth Klarman remains the old school. He's a deep value investor. His hedge fund has Bopost, BAUPOST. He's a very deep value investor. His famous quote I remember is, "We know the end will come, only we do not know when."
Correct.
So that is his most favorite quote. He is one of the greatest value investors that we know today.
One of the first books you made me read before even what you call investor was Peter Lynch's book, One Up on Wall Street. I remember you had that book. It was dog-eared and
It was there, it's still lying there.
Yes.
Or I gave it to Vagesha, I don't know.
So why did you make me read this book? Let me walk through
But
that.
for you to understand what is capitalism, what is stock market, how an economy works, and how you should look for a stock. And I think I remember I told you.
Yeah, and the book
First
also
go
talks
to-
about how to identify good companies. Meaning
Yeah, so
companies
you
which
go to the
probably use in a
supermarket.
day. Yeah.
You go to the
Correct, that famous thing you
supermarket.
told me, yes.
I keep telling you that.
Yeah.
You used to smoke those days.
Correct.
And I used to tell you, instead of smoking, if you bought ITC, what would happen?
Very true, man. I would have made a lot of money, and not only that, saved my health also.
Yeah. So, or if instead of drinking Kingfisher, if you had bought United Breweries.
Correct.
Okay. Similarly,
But not Kingfisher Airlines, huh?
no, I'm talking of breweries.
Correct.
And that's why I'm very clear.
True.
So, one of the big things we picked up, you must have forgotten. I still have 50 shares left of that. Our Amma was diabetic.
Correct.
So, Raman recommended sugar free.
Yes.
Not this Raman, the old Raman.
Yes, our MSV.
MSP recommended sugar free. So, when we looked at sugar free, there were only two companies making sugar free.
Correct.
One was Zydus Wellness and one was Wipro.
Correct.
I came back home and I checked what was Zydus Wellness. It was available at 8 times earnings.
Correct.
We bought it for something like 200 rupees. It's trading at 1,260.
True. Very true.
So that is what you learn with Peter Lynch.
Okay. Another book which you made me read by Philip Fisher, which you already touched upon, was Common Stocks and Uncommon Profits.
Yes.
Excellent book to find good companies and understand when to buy and when to sell, it says.
Yeah. So he talks about Fisher's principles. Fisher's principles are universal. That is, the difference between the Graham school and the Fisher school is Graham will buy only when it is very cheap. So he talks about a cigar butt principle. That is, somebody has smoked half a cigarette,
Correct.
and then you pick up the cigarette and have few puffs more,
True, man.
right?
All smokers have been there.
Yeah. So if you find a half of smoked cigarette, it's like finding a treasure trove.
Yes.
That is Graham's style. Here he says, you buy a great company at a fair price, and the company will continue to grow,
Correct.
and you grow along with the company. The classic cases, Infosys. I think we bought it very cheap.
Correct.
I got it very cheap. I got it at 300 or something. Several bonuses later, it's still lying in the portfolio. Or my father bought Dr. Reddy at 10 rupees at the IPO, and we still hold on to it.
Correct.
We hold JSW like that. So these are examples of like buying a good company and keeping it for life. The company grows, you grow with it. The problem is, if you don't do the analysis, then out of 10 companies, like my father picked it in those days, we didn't know anything, of course. So 10 company, 10 companies, only 3 or 4 became. But the returns that Dr. Reddy, Infosys, and JSW gave dwarfed all the losses he made in the other stocks.
True.
So the principle is true. You apply Fisher's principle, you can definitely buy these stocks.
Okay. So these are the few books which we discussed about. I think next week we'll talk a little further about some other books also which we need to touch upon.
Yeah, and Fisher is very famous where he talks about scuttlebutt, where he says that you do a lot of research on a company. So how do you do research on a company is you talk to the customers of the product. So if I want to buy ITC, I should talk to somebody who smokes or somebody who uses atta.
We can talk about that famous example of Warren Buffett and American Express.
Yeah, exactly. So in Ashirvad atta, and in case like what I did with Zydus Wellness, what he did with what happened is there was a salad oil controversy, which
Correct.
we can explain. So the American Express thought they were having salad oil in tanks,
Correct.
but they were actually having seawater. So when that fellow became belly up,
Correct.
everybody said this fellow, the American Express, would go belly up.
Correct.
So, and the price was hammered down.
Correct.
So Buffett went and found out that people were still using American Express.
Swiping the card.
Swiping the card. And he put in a quarter of his money in that.
Correct.
And he made 7 times
And
the
boomerang,
money.
yes.
Yeah. So those are things that you wait for, those kind of opportunities. That opportunity came to us in last year when that 2-3 employees, disgruntled employees, said that Salil Parekh of
Infosys.
at 600 rupees. If you had listened to me then, I think you listened to me.
Yeah, I listened to you. I don't know if your public listened to you. I hope they're listening.
It has gone up 4 times, 3.5 times after that, plus dividends.
True.
So what I'm trying to connect is, if you read the books, you can reconnect it to the actual decisions you make in the market, and you will do well.
True. And I agree. And I first recommend everyone to read your books first, because
my books are just copy
no,
of these
because
books.
it's true on an Indian context. The reason why I say your books is because the problem with all these books is it has a very Americanized context.
It is Americanized.
Yeah. But your book,
I tried to make it an Indian book.
which is what is very useful for an Indian investor, especially a starting investor, to read the stories in the context of an Indian situation, Indian companies, and things which are very specifically true to India, which you highlight in your books, is true.
Yeah. Thank you.
Yeah. So you're most welcome.
Thank you for watching Be Rich. I hope you enjoyed this conversation I had with my brother. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support.
For hot financial news reviews and economical updates, watch Be Rich. Please don't forget to like, share and subscribe our channel.